Gross margin, net margin, you're at a cocktail party, you hear someone talking about these margin metrics, and you just don't really understand what the difference is. What we're gonna do today, we're gonna explain to you the difference between gross margin and net margin so you understand it. And then when you're looking at a stock in the future, you'll be in a position to analyze that company and better understand how profitable, how viable they are as a company. Both of these are financial metrics, ratios that are used to identify how strong these companies are, how good management is at converting $1 of revenue into some form of profit. So if you have margin, that means you've made money, right? Making margin on $1 of sales is how much profit on that dollar you've made. But there's a whole bunch of different ways to measure profit. So let's start with gross margin. So gross margin is kind of the looser margin, kind of the higher level margin where the only thing we're measuring here is the cost of goods sold. So you basically take your total revenue minus your cost of goods sold and you divide it by your total revenue times 100, and that gives you your margin. So the gross margin really reflects how good a company is at making profit off of their sales. How good are they at converting that revenue into bottom line dollars for the company? Now it only reflects revenue and cost of goods sold. So it doesn't have a true picture, but it does accurately, very accurately measure that metric. The higher your gross margin is, the more profit you are making for every dollar of revenue. So think $1 of revenue, if a company's making 50% gross margin on that, that means their cost of goods was 50, they're taking home 50% of that. Now that's obviously before all the other expenses, but that's what the measure measures. Your net margin, on the other hand, is a real bottom line of profit after all the expenses have been calculated. So this metric will measure the revenue. This measure will also deduct not just the cost of goods sold, but also your operating expenses, your interest, your taxes, your depreciation, your amortization, anything else that's non-operating gets deducted. So that gives you your net income, right? And your net income is your true bottom line profit made on every dollar of sale. Make $1 of sale, costs you 50 cents to produce that widget, your cost of goods sold. That means your gross margin might be 50%, but you might have another 10 cents of taxes, 10 cents of depreciation, 10 cents of interest expense, and therefore you made 20 cents of net margin on that dollar of goods. So your net margin is after all the expenses have been calculated. It's your true profit that you're taking home as a business owner. And when it comes to publicly traded companies, it's the profit that effectively goes back to shareholders, either directly through a distribution or a special dividend, or back into the company through retained earnings and gets reinvested in the company. So net margin is a real, true, comprehensive measure of profitability. It measures how good management is at converting that $1 of sales into profit. You might have a company that has a ton of revenue, but very low net margin or no net margin. They're not even profitable. You can have companies that are not profitable, therefore not making any margin. Or a company might be very good, maybe lower sales, but higher margins, and therefore more profit for the shareholders. The net margin is a more comprehensive look at management's efficiencies, how good they are at managing. Your gross margin really looks at like production, how efficient a company is at getting the optimal value from the cost of goods sold, from $1 revenue relative to the cost of goods sales. And it also is useful because it doesn't take into account how management kind of looks at all the other stuff. Maybe they spent a ton on marketing this year, etc. So there's other variables. It's a simpler form of metric, simpler ratio that measures just your one metric, which is your revenue and your cost of goods sold, and brings it back down to a margin percentage number. Net income, much more useful to look at the entire company. So depending on what you want to look at, there you go. You could either look at quick, big picture gross margin, or if you want to see everything, you're looking at the net margin. If you're not sure how this impacts the stocks that you own in your portfolio, or if you're wondering if this impacts your retirement and you'd like to book a no obligation consultation, go to speakToRob.com. We'd love to chat with you about this or anything else that's on your mind. I'm Rob Tetrault, guys. Thanks for tuning in. We'll see you in the next video.